Hey, good morning, everybody. Listen, just wanted to get this out there. It looks like both crude oil and natural gas are facing a lot of declines. We are early in the Monday cycle, so sometimes you see a counter trend when we really open up, which is going to be here in a little bit. So let's first take a look at crude oil, and crude oil is really reeling. And I think it's very telling that we are reeling despite two wars, one in Russia, Ukraine, the other one in the Middle East with Israel and Hezbollah. So I think that this shows a real concern of traders, a real concern of traders on the economy. So I think that is playing into things, and I think that is a really, really big issue. So this week, I expect that we are going to target this 72.95, and that is going to be kind of the line in the sand. As you can see, the last time that we tested that one, we held it and supported and bounced way off and went back up into the 80s. We've since come back off. If this does drop, we are likely looking at probably the 68.48 level, which is not very far. And then this 66, that's another line in the sand. 72.95 is a big line in the sand, and 66.84. If both of those go, then we are headed probably, I don't want to say it, but possibly down in the 50s. So those are the levels that I'm watching on crude oil. 72.95 I expect to be the magnet this week. 68.48 if that one does not hold, and 66.84 is likely the extension. That's the last line in the sand. 63.80 is a minor support from there. So now let's look at natural gas. Natural gas is one that we are grinding down, and I actually just put out the weekly report, and in there I said that we're kind of compressing, but when we correct upward, it is going to be a big one, and it's probably going to be a very quick move to 250. That's what I see. We're kind of compressing this spring. So as we look into, let me look at one thing because this is a curiosity on here. Not that one. The moving averages are bearish. MACD looks like it's about to cross and go bullish. So that is good. And for those of you that don't know, this is natural gas financial. These are all the technicals. And as you can see, we are kind of compressing our Bollinger Band. It's not super tight, but anytime you have a compression of the Bollinger Band, there's going to be a big move. And now it doesn't tell you which direction, but that big move, I would say after we've dropped from this level all the way down, that it's going to be a move up. So that's what I would expect, and that's what I think. So this week, I do think our key benchmark is going to be this $1.99.4, and that we will probably creep back up to this 204.8 and start to climb out of the seller. So that's what I see, because a lot of the physical prices aren't really showing as much weakness there. So I threw this together really quick, and let's just hop through this. Natural gas, on the natural gas side of things, let's see, recent price trends down. There are cooler weather impacts, and let me pull that up here. Da, da, da. Yeah, so our cooling degree days are going from 14 down to 10, and even extending to 9. So that is gonna impact things. As you can see, the 6 to 10 is showing a lot of cooling, and then the 8 to 14 is going to be kind of back to normal, and then equal chances for weeks 3 to 4. So this is what traders are really responding to is that there's some softer trends. And for those that are not aware, Brendan is putting out amazing content here. So he is really stepping up the weather game. So for those of you that are not looking into this, this is a big one. So and this is in preparation for sneak preview here. Um, We are still toying with the name and everything, but we are developing a product with Brendan, weather for energy and ag markets. So that's what we are working on with Brendan. So be aware of that. So the cooler weather is definitely driving into this. Production has been up. That's been a leading story. I did do some analysis, and there's actually a greater price relationship with LNG than production. So that's just interesting. It's harder to see because it's a slower moving variable, or it doesn't seem to move as fast. So that is interesting. There's a higher correlation to the higher or lower LNG exports are going to be. There's a higher relationship or correlation to actually price. And so we are showing an increase on LNG. We are also supposed to this year get some more LNG export capacity with Plaquemines. So storage, we're sitting at 16% above. Again, we were over 35% back in March. So we've made up a lot of ground. And if we exit where we think we're going to exit about 3.8, that is kind of a normal entry into winter. So then it's going to rest on winter demand. So I'd say the storage injections, I added this chart, and this chart again on natural gas. This chart on natural gas is really, really a key chart because this takes, if it will load, I'll give it a few minutes to load. So the hurricane impact, Debbie, that is going to impact power demand. So we are going to have a drop in demand. I'm sure that's factoring into things as well. The weather conditions, we've had record-breaking heat. Will it continue? Right now, it's going to soften a bit, but then we'll have to see how that plays out. The economic fears are weighing into things as well. So weather impact, storage, and volatility are the main stories. The outlook, we're going to be sensitive on LNG exports and weather. Supply adjustments. There are more reports, such as Chesapeake, saying we're deferring completions to 2025. I think that is already happening in play. We haven't seen a dramatic increase in ducks, and you can find those on the rigs button right there. So this is the chart that I've been, this is a new chart. And if I take this back to 2019, anything above normal is the summertime injection period. And when I visually look at this, we have a lot of supply versus, this is supply versus demand, total supply, total demand. It doesn't include imports and exports. So what I can start to see if I was just painting an average is kind of a stair step down, that even though we've been increasing supply, we are slowly on the supply demand dropping in the injection season. So I think that is brewing something. Now, what has saved the market is during that same period of time, we've had this one's harder to paint. We've had probably not, you can see these are thinner than these. That means that there were more, less days or less weeks that we withdrew a lot. So it's a little harder to see on this one. I'm gonna come up with a different chart on this one. But what you can see is that the width of this from this side to this side are shrinking. And so what that means is we're injecting less in the summer because we're using less because of LNG and electric power, but it also means that in winter we're not using as much. I see that as we've been let off the hook on winter weather and it will return, it will come back. So that's where we sit on natural gas. On crude oil, the crude oil prices are declining, economic indicators, there's rising unemployment, job growth is sluggish. US and China are showing both weak data. So, and this comes from the manufacturing side, kind of the big economy. Despite Middle East tensions, despite Russia, Ukraine, the fact we have a falling market, I think, is really, really telling. So I think this means that the economy is really leading the way and leading the story. And this is really concerning because this might be really big. And we're a couple months away from an election that we'll have to see how that plays out. OPEC plus production cuts. We're also going to have to listen for OPEC plus because if they bring those extra barrels on, I mean, 50 is not out of the question. I don't see that. I see us structurally shifting to triple digits at some point in the future. I don't know when, but the triple digits will be normal, I think, in the coming years. So, let's see, market analysts, what are the experts saying? They would suggest that actual supply disruptions. So that's the other thing. Traders are shrugging off the wars and conflicts because it really hadn't impacted production yet. It is making shipping lanes longer and shipping routes. So what that does is it's not impacting the crude oil price. It is impacting the price at the pump because that is really what where that cost is going to be warehoused. So the key observations: economic slowdown, geopolitical risk versus economic concerns, and the market strategy for OPEC plus. Again, let's take it back. Natural gas looks to be headed back up. 94.8 is probably the near term. I think this 199.4 is where we're going to head back to. And then probably I think we would exit the week maybe at this 216.2. That is my bold thought right now, very early on Monday morning. Obviously, this could change, and it's not trading advice. We're not trading advisors or financial advisors. These are my thoughts on trading and trading direction. On the crude oil side, it seems like we have saved 72.95 just while we started this. So we're up about $1 since I started recording in the past 10 minutes. So listen, I hope you're doing well. Hit me up if you have any questions. And I do plan on having a shorter live stream on Discord tomorrow. So feel free to ping, join. It's not going to be super long, but that's what I'm going to be working on. So hope you're doing great. Have a great day. Hit me up if you need anything, and we'll talk soon.